ASML, their earnings were out on, I forget if it was Tuesday or Wednesday. Actually, I think it was Wednesday, but we'll roll Wednesday. And the market didn't like these earnings, sent them down about 6.5% on the day, which they'd been having a decent week up until that point. So I think the market was expecting something a little bit better. It sort of coincided with some bad news for Nvidia and Jensen Huang turning up at China, and Elon Musk being threatened not to go to China by Trump as well. So the news all sort of rolled in together to cause ultra pain. But ASML, they didn't help themselves either. So net bookings came in at 3.9 billion. That was a zero point 0.9 billion miss. Net sales, despite being up 46% year on year to 7.7 billion euros, was a 40 million euro miss. Gross margin came in at 54%. That was up 3 percentage points year on year. About a 35% operating margin, which was up 9 percentage point year on year. So volume business, as manufacturing tends to be volume based. EPS of about €6. That was a 20-cent beat. And they did reiterate that full year net sales guidance that they've been given since the dawn of time of 30 to 35 billion euros. In Q1, Steve, they repurchased about 2.7 billion of shares. They also purchased the quarter before about 1.9 billion, I think it was as well. So definitely making a dent in that share count, although it's still a pretty decent sized company at the moment. So in terms of the statement and outlook, not a lot of information in this one, to be honest with you. The Christopher, I think his name is Christopher Fouquet, is how I'm going to pronounce it. I don't want to pronounce it how my whole accent would say it, because that's swearing. But yes, first quarter total net sales came in at 7.7 billion, in line with guidance. Gross margin 54% above guidance, driven by a favourable EUV product mix and the achievement of performance milestones. In the first quarter, they shipped their fifth high-NA system. These systems are now at 3 different customers. He said, conversations so far with customers support our expectation that 2025 and 2026 are going to be growth years for ASML. However, the recent tariff announcements have increased uncertainty in the macro environment, and the situation will remain dynamic. As previously shared, AI continues to be the primary growth driver for ASML. It has created a shift in the market dynamics that benefits some customers more than others, contributing to both potential upside potential and downside risks, as reflected in the 2025 revenue range, because 30 to 35 billion is, there's a big gap between that. So look, we expect second quarter total net sales between 7.2 billion euros and 7.7 billion euros, and they said that the gross margin will be between 50 to 53%. They reckon that there'll be R&D costs of about 1.2 billion, SG&A of about 300 million, which is in line with what they previously communicated. And again, they said the net sales of 30 to 35 billion with a gross margin of 51 to 53, subject to uncertainties. So yeah, I thought the market reaction was quite harsh, Steve. There's nothing in this report that isn't the standard that we see in ASML. It actually finished the week down about 4.5%, which perhaps a little bit harsh. It's getting pretty close, Steve, to my buy point. I think my buy point is only like 40 or 50 euros below this price now, which is not a massive amount considering what ASML has planned for the future. So it's on the list of things to buy. I've still got most of that cash from the time we spoke before. I've done a little bit of buying, but nothing special. Is it anywhere near your list?
It's interesting, isn't it? I mean, you would expect a lot of companies to be tariff sensitive at the moment, and yes, subject to uncertainties is. It's always true that things are subject to uncertainties, but more so at the moment, and reasonably so for businesses generally and across the board. But ASML finds itself in a kind of particularly awkward position. I think it's in a kind of economically sensitive area, which is semiconductors, and it's right at the front end of that, which is connected closely, as you say, to AI. And that seems to be where while the US appears, to some extent China as well, appear very keen to compete with each other rather than just focusing on their own projects. So yeah, I'll be interested to see where this goes for ASML. I think I'm minded to think in a lot of these cases that you can possibly look through these, and I realise that the Trump administration isn't that old, and you do need to be doing some long-term thinking. And even if you are long-term thinking, you can't just ignore the next 3.5 years or whatever it is, right? You can't say, well, look, I've got a 15-year time horizon, so I don't care. I mean, what's going to happen in the next 3 years is a fifth of your 15-year time horizon. If you want to talk about that, you can't just write it off completely, and it's the most important part because it's the front end, which is where the kind of compounding effect gets the biggest kick, or where your kind of initial gains get to compound for the longest. But I'm not sure. I feel as though ASML has a competitive advantage that is longer than you might think the Trump administration will last, to be honest, when it comes to manufacturing these things. I am hearing talk, when I tried to look into its sort of competitive position, likely competitors, I heard talk of stuff from Japan filing patents for EUVs. Huawei in China has been filing some patents about EUVs. As far as I'm aware, there are still kind of technical difficulties and they are a long way back from ASML. But that's the kind of thing that would worry me more, I think, when I think about buying this stock, than tariffs and sort of short-term uncertainties. I think short-term uncertainties have to be bad for ASML, partly because they were in a strong position before, and genuinely uncertainty, these are big expensive things and they require companies to commit a lot of capital to them if they're going to buy them. So even if you're one of the big firms here, this is a serious investment. So you take it and think carefully about it, and you want to be able to see your way to a return from it in pretty much certain terms. At times like that, ASML kind of runs into, well, quote unquote trouble, but might be where pessimism is highest. Whether that's really reflected in the share price at the moment, maybe, maybe not. It depends a little bit. I think Huawei is still a way back. I think the guys in Japan are still a fair way back. I think Canon were attempting some sort of thing like this. I think it's an interesting category, and I can see other parts of it. Here's where I see myself potentially getting to buying on this. I can see semiconductors being a slower and more uncertain part of the market to recover out of some of this. Some of it's got back already, right? But bits of the market have. Some bits of the market have even moved ahead. But I can see semiconductors, and in particular semiconductor manufacturing equipment, being a slow, longer recovery out of these. And that might be where my opportunity comes from with ASML. You bought this a while ago, of course, so you're talking about 10% sort of better than you were when 10% higher share price, I think, from where you bought it before. Might be a 10% more profitable, bigger business by now. You get a better value offering if you go again at this point.
Yeah, I agree with that, Steve. And I think it does bear thinking about. There was a couple of points really that I just want to pick up on what you're saying. So basically, what ASML's machines do, other machines can do at the moment. There are machines that can. I think IBM have a machine at the moment. Canon almost definitely have a machine at the moment, and China is rumored to have a machine at the moment. The problem is that on a sheet you need to be able to get 99 out of 100 right, and that's a huge leap from just making one on a machine, and that's where ASML's machines are ahead of the other machines. Now, look, if you can get a machine in China and you're funding it with unlimited money from the government that produces 50 out of every 100 are working chips, then the China might roll with that. Do you know what I mean? And the government would fund the losses, the shortfall, whilst the technology improves. Now, that's a real danger to somebody like ASML, and also that's brought about by the fact that we've limited the shipping of these machines to China. They wouldn't have to race to make them if they could just buy them. So in a way, these export controls tend to make in the same way that DeepSeek has found a way to be viable. They tend to help countries find a way to improve the technology rather than stunt it, like the US government is expecting to. But yeah, just a reminder of ASML's moat really is that the supply chain for them is incredible, and they also have equity stakes in large parts of it, especially the key components. So for somebody to, it's not a case of somebody finding all the suppliers list and printing off on a piece of paper and emailing it to China or whatever, posting it to China, and then they have the supplier list and they can just get all the parts. ASML has equity stakes or owns quite a large part of the supply chain, so it just wouldn't be able to happen that way. So you're talking about really highly precise, incredibly well engineered parts that will also take years and years of development to be able to replicate. So I'm not particularly worried about that right now, Steve. But they actually upgraded their forecast on their standard sales to China. They reckon China would be about 20% of their revenue, but they've actually said the market there is looking stronger for the year. So they actually said it might be more like 25% now. So China is still buying these mainstream EUV machines that they can. I don't think they're quite EUV machines, but whatever machines that they can get their hands on, they're still buying them, and there's still demand for them. So, yeah, I don't think there's anything to worry about just yet, Steve. And yeah, it's on the list of things that I probably should take a close look at buying.
Yeah, if there's nothing to worry, if you aren't seeing anything to worry about yet, that does make this look like a buying opportunity. You might have convinced me there as well, but I'm not quite. The trouble with my portfolio at the moment is I have to try and work out what to clear out to work out what to buy, and there's nothing that is obviously the right thing to go with there, at least not after having messed around with it this week. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.